Hello, everyone. We're going to wait until 11:01 Pacific time to get started to just give folks 60 seconds here. You know, we've got a lot of folks jumping on, so just hang tight for just a minute, and we'll get started. All right, it's feeling like it's already been a minute, so let's get going. Thank you, everyone, for joining our webinar today regarding MCT's EBX solution, Enhanced Best Execution. As a reminder, this session will be recorded and will be shared with everyone that's registered, in addition to the PowerPoint deck that we'll be going through during this session. Also, feel free to submit questions if you have any. There's an option on your screen. If we're not able to get to those questions before the end of the 30-minute session, we will certainly be following up with you directly. So let's jump right in. You know, we're very excited about this unique opportunity to unveil this innovative capability. MCT now is the only company to effectively bring all the essential execution pieces together in a single platform, making the best execution process more complete and efficient for secondary marketing managers and traders by including robust MSR retain release analysis. But before we actually get into the presentation, I would like to take a moment to introduce our speakers. So Danielle, if we could move to that slide. I'm Bill Sheriffs. I'm Senior Director, Head of MSR Services and Sales Operations for MCT. We also have Paul Yarbrough, Senior Director, Head of MCT's Client Success Group. Also have David Burris, the Sales Director of our MSR Services team. And then Natalie Martinez, Senior Manager for MSR Services and Client Success. So that is the team. We've got an all-star group here. So let's move on to the next slide, Danielle. Thanks for navigating. So just a quick review of the agenda. So I'm going to kick it off with some of the common retention strategies that are currently being used, and I'll turn it over to David Burris, talk about current MSR market and trends. And then Paul will share his thoughts from a trader's perspective, not only including EBX, but some of the other efficiencies and BestX tools that we have. And then David will come back on and talk a little bit about the highlights of EBX, what it is, and then we'll finish it up with Natalie walking through how EBX actually works. So, and then if we've got time at the end, like I said, we'll take questions and we'll address them. If not, we'll follow up with you afterwards. So Danielle, let's keep moving. Slide 4, included on this slide really is just a list of some of the various retention strategies that servicers currently implement. These specific approaches are very common, but will absolutely result in MSR portfolio imbalance and risk exposure over time. Each of these approaches will generally impact prepayment speeds. And we all know that mortgage originators retain servicing to build a portfolio, but also the principal objective is to secure reliable and predictable cash flows. To achieve that objective, though, it's essential to have a process in place to retain the appropriate loans based on the economics, not based on perception. So if you look at these approaches that we have on the screen right now, first one, a static multiple. You know, we know that loans with different characteristics have different values from a cash flow perspective. High credit quality loans often prepay faster because the underlying borrowers have the ability to refinance they're more readily. And then high balance loans, they will be more sensitive to interest rate movement. As a result, will prepay faster and be more volatile. So these approaches are very common. Oftentimes from perception, clients and servicers will retain these loans and not really understand the underlying implications around prepay speeds. So that is really sort of setting the stage for us to get into a solution that we've developed that is very efficient for, again, secondary marketing managers and traders to leverage and to make their decisioning around retaining and releasing much more efficient. So with that, I'm going to turn it over to David Burris to give us a quick update on the current market and some of the trends. Take it away, David.
Yep. Thank you, Bill. I do appreciate it. Yeah, this particular market, obviously since COVID, MSR has been an exciting topic to deal with, and particularly when it comes how to continue to maintain your portfolio. Portfolio values have really kind of peaked as according to the kind of the way that we've been tracking since COVID. I guess Q3 of last year is probably where they peaked, and now we've started to see slight declines occur within the books. Portfolio, and the reason for these is most of the books are getting older, even if they have low wax in them. The things that people forget to overlook or that overlook and forget to think about are things like just that you've got a regular runoff taking place inside the book, death, divorce, and moving are always taking place. And then, of course, the older the loans get, you get declining balances and escrows. So the cash flow that you started with is certainly not the same today. The interest rate reduction in 2024 is anticipated. So certainly that also is something that really has an impact on value moving forward. And then, of course, we are seeing some short-term volatility. We'll show you a little bit about that in a slide to come. So, if you're managing a portfolio, what solutions can you look for to really help you continue to maintain the value of your portfolio? And we're talking to many of our clients about this today because they're watching their values decline slightly and are wondering what they can do. The real answer is you really have to keep adding a select amount of loans to your portfolio, at least 20 to 30% to replace the runoff. I think the question that really all folks have been faced with is, as Bill covered in the slide before, is how do you pick? And in most cases, people are picking intuitively. And what we'll be able to show you is within our MSR model, we can show you exactly the right characteristics to look for and pick the right loans to keep in your book. So with that, Danielle, can we go to the next slide? MCT tracks servicing execution type for all of our clients. And so this book, I'm sure you might have a hard time reading the dates at the bottom, but the last date on this is April 21st. So, but we keep this, we've been keeping this for quite some time. So this shows you the last couple of years of the market. And really why we had this slide is to let you know that market execution changes all the time. And literally within the last week, with interest rates ticking up a little bit, we've seen a number of the buyers really increase their multiples to their SRP pricing to really attract and buy the business, because they realize that there's not going to be much origination left out there, and they're really trying to grab up everything they can, to fill in the backlog of the large amount of runoff they have on these huge books. So just wanted to let you know that keeping an eye on the execution, particularly on MSR, is every bit as important as watching all the other executable items that you keep track of. So with that, I want to go ahead and hand it off to Paul and let him pick up on where we're headed with this inside of MCT Live. Paul?
Yeah, thanks, David. The title of the webinar is, a complete best X. So while we're focused on the enhanced best X portion of our best X, it's a good time to reiterate what's available in MCT Live, so you have a good understanding of how this is a complete best execution analysis. So, we're going to cover obviously bulk, your agency, that is cash or MBS retained, obviously your agency cash or MBS co-issue, your bulk AOT options, and then best efforts. As there's some aggregators out there that can show a strong VE price, and if that's the case, then we need to hit that. So Danielle, if you'll flip to the next slide there. Just going to go through some screenshots here and mostly commentary for myself. But as a reminder, in MCT Live, we have your bulk executions, right? So your bulk executions are going to be those aggregators out there that are putting bids, and MCT is a secure platform for both the buyer and seller to communicate loan level and bid level information back and forth. So you're posting your tapes in the system, and then the investor or aggregators pulling those tapes into their pricing model and pricing them out and posting that information back in MCT Live. So again, can't stress it enough with security measures today that this is a secure closed system, so you really limit down the possibility of information getting into the wrong hands via email. So let's go to the next slide there, Danielle. Then one of the things that we do offer is an integration with the agencies. So what's great about that is you get to pull in live pricing, not only live base pricing from Fannie and or Freddie on the cash window side, but also live SRPs from the cash release exchange with Freddie or the S&P pricing engine with Fannie. So that means you have the most up-to-date pricing from either agency in the co-issue. Then obviously with Freddie as well, any CTOS relationships you have, we can load those grids for you, so you get the most up-to-date price there. Then for those of you that are guarantor with Freddie or Fannie MBS, we also have the ability to best X your guarantor and MBS executions with any servicer. So you have could be co-issue, could be retained. So this is what's showing in the second screenshot here. Then what's important about best Xing that is making sure you're able to best X that excess servicing, right? So are you going to take the excess to a co-issue or retain it perhaps, or are you going to take that excess and sell it back to the agency? So that it gets incorporated and ran and then imported into your best X, so you can make a full best X decision there. The agency cash window API connections from MCT Live to Fannie or Freddie also include committing. So not only live pricing, but committing. So you really can do a full agency best X right there in the system without any troubles. We'll go to the next slide there, Danielle. And AOT, for those of you that have been on a MCT webinar within the last few years, you know that we're very proud of our AOT capabilities. So that's an assignment of trade for you, where you can lift your TBA coverage and assign that to your aggregate investor. So you can take that this screen right here and show that all of your securities and security types and coupons, and pick your trades that are, again, housed in the same system. So it's all embedded within MCT Live, and very efficiently create tri-parties and your deal workbooks and request commitments all within a couple of clicks, and get those over to the investor and have your trade blotter updated right away, saving on that bid-ask spread from the market there, and really can ultimately bring you a ton of execution and help your favorite investors that offer AOT out by making their price look even better, just because it does actually save you money and enhance their execution. So again, the system here is going to include that on any aggregator that offers an AOT execution. And then we'll go to the next screen there. Sorry, that before I hand it back to David, just one more, a couple more comments. Like I said, the best efforts execution too, we'll have all of that in MCT Live for you to compare. If it is a released execution that you're looking at, we can include best efforts pricing in that, just in case there are a couple of investors out there right now that do have a strong BE price in some instances. And in our point of view, loans closed, you can get a short-term best effort commitment, and that's the best price, and then let's take it. And then just to reiterate, that complete best X, where you're looking at MBS, that could be Ginnie pools as well, and then guarantor, Freddie MBS, cash window executions, best efforts, bulk, and then bulk AOT. All of that's going to be included as far as the best X. But then it comes down to, do I retain or release? And I think over the next few slides between David and Natalie, you'll see that there's more to it than just the highest price. So David, I'll kick it back to you to start talking about EBX.
Thank you, Paul. I do appreciate that. Yeah, that's really what we're trying to highlight in today's presentation is you've known what a great job Paul's team has done about putting all the execution types into MCT Live, making those available to you and making those in such a form that you can execute against whichever version best suits you. Now what's being added to that situation is EBX and the ability to do MSR execution inside of here as well. Danielle, if you could go back to the prior slide for a second, let me just run through. So let's just cover for a second, what is EBX or enhanced best execution? What this, in simple language, this is a moment in the decisioning process at loan sale where you're going to be able to look at the best aggregator pricing for a released execution compared to the MSR value of that loan, and should you keep it as a loan in your portfolio or not, really based on a cash flow analysis, meaning we take all the tax implications into account as well. So in other words, let's just say if you're going to make, round numbers, $1,000 on a loan, but based on selling away to PennyMac, and you have that money in your pocket, you're going to pay taxes against that $1,000 as soon as you execute against that transaction. If you were to retain that loan, then you would make that same $1,000, over the servicing life of that loan, 25 basis points a year for as long as you have it. And so therefore you're going to be taxed as you get the income each year. So the cash flow is much different, and it really lets you measure how quickly you need to hit your cash flow target of when your payoff needs to be in order to keep those loans, along with all the risk associated with those loans. So this happens at a loan level pricing. This happens at each and every loan is focused on and targeted, and you get an individualized retained pricing for each individual loan. It's live. It's happening every single time you do a loan sale, and you get to see immediately the cash that you either keep or give up based on this decisioning. So, and you can even, and these are all items that you can tweak yourself. The cash even break point is something that you can decide based on your cash needs or how aggressive you want to be in retaining those loans. So with that quick definition, let me turn it over to Natalie and let her show you what it looks like in the system. Natalie?
Thanks, David, for that overview. Before I do that, I also just kind of want to give a little bit more background on EBX. And, this is a product we've actually been offering for a number of years now for our clients. But really for the purpose of this call, and then Danielle, go to the next slide, it's really to announce that, EBX is now fully integrated with MCT Live. So you really do, as we've been saying on this call, have a complete best X now right at your fingertips. And even today, if you go into your MCT Live account, you should be able to see this, MSR Best X EBX button. But before we go into the EBX model and what that output looks like, I do just want to spend a moment talking about MSR Live. Because EBX, and the reason why we're able to have this integration is because we now have an API from MSR Live to MCT Live. And MSR Live is actually going to be generating that retained value you're going to see in the EBX model. So if you go to the next slide, please. So what is MSR Live? So MSR Live is our proprietary, complete, MSR portfolio management tool. This is something that we use to generate the grids that we provide clients. It's something that we use to produce the third-party valuations that we produce as well. And it's also something that we, license out to clients just so that they can manage, their portfolio asset. And then on the next slide, Danielle, just Some of the key features of MSR Live really are just the customizability. So, in MSR Live itself, you're able to create, as many different, we call them input templates, but are really just the assumptions that go into the model as you want. And these can be, again, client specific, whether you want to run different types of scenarios on your valuation or run different types of, values itself, from fair value to market value to an economic value, where fair value would be, more closely tied to what you'd see in any third-party valuation, and an economic value would be, having the true economics of your company in your cash flows itself. So what we do for clients that want an economic view is we actually look at their subservicing contract and we'll put in those servicing costs into the model. We'll determine what the earning rate is for that client and put that in, their cost to advance, what yields make sense for that company. So all of those, I would call them like the economic assumptions, can go into the model to produce, again, cash flows that are going to be reflective of that company's actual, servicing costs, advances, etc. Another major feature of MSR Live is just the fact that we have our own proprietary prepayment and delinquency model within the model itself. So those are all generated based on national averages we get from Fannie, Freddie, and Ginnie. But then what we do is we actually calibrate the models from that national level to a client-specific level. So we'll get the company's, their client's actual portfolio, run that through the model, and calibrate it to make sure that the prepay assumptions, or prepay projections are going to be in line with that client's actuals. Same thing with the delinquencies, that our projections are going to be in line with the delinquencies the client is seeing at the time. And again, the reason I'm going over this is really just to kind of highlight the importance of having a model that's calibrated not only on a client-specific level, but for the value that you're looking for. Again, this is going to be the retained value that you see in the EBX model itself. And that value is just, absolutely crucial, to have a retained value that's reflective of what your needs are and what your actual portfolio is like. And that's going to be, having an accurate retained value is going to be crucial in that retained versus release decisioning. So on the next slide, we can actually get into the EBX output itself. So, as I mentioned, EBX is now something that you can do right within MCT Live. So after you run your initial loan sale in MCT Live, you're then going to be able to click that EBX button I was showing earlier. And then this is what the output is going to look like. Over to the left, we just have, what we left off is just some of the loan numbers and loan characteristics from the loan sale itself. But really where it starts getting interesting is in this first column we have displayed here, which is the retained value. So again, this is going to be coming from MSR Live. So when you hit that EBX button, it's going to push your entire loan sale to MSR Live. And then again, depending on what assumptions you decided to use for EBX, how the model is calibrated, we're then going to be producing this retained value of what we think this loan is going to be earning over its lifetime. So in this first loan here, you can see that 2.279 bips. Now for the released value, this is going to be looking at the loan sale that was just run. So we're going to be looking at the highest price investor for this loan, and then we're going to be minusing the agency pricing. So let's say this loan's going to Fannie Mae. We're eligible for Fannie Mae. We're going to be taking that highest aggregated pricing minus the agency pricing to really get an applied SRP, but that is what we use for the released value in the EBX model. So the next thing we take into account is the tax incentive, as David was mentioning, for retain versus release. Just because you have to pay taxes on day one if you release the loan, versus if you retain it, you're going to be able to pay those taxes over time, on a yearly basis as you hold the loan. So as you can see in here in this example, for the tax rate we have in the EBX model, they're going to be paying 60 bips of taxes on day one for this loan. So the next thing we want to look at as well is if you have an MSR financing line, because that's also going to push down, how much cash you're having to give up on day one to retain. So in this example we have here, we have this, 22 bips MSR financing you're going to be able to get. So those two factors go in to get this final, released post-tax cash value of 113 bips. So that's the amount of money basically that we're looking at to determine, okay, if I retain this loan, that's how much cash I'm giving up on day one. And so what our EBX model wants to do is says, okay, how long is it going to take me to earn that cash back? So what the EBX is doing in the background is it's looking at those cash flows generated from MSR Live. It's going to be calculating the, how much servicing income you're getting from that loan. It's going to be looking at the amortization. It's going to take into account the financing costs if you have any, as well as the taxes you're going to have to be paying on a yearly basis. So all of that's going on in the background in order to determine how many months it's going to take to earn that 113 bips back. In this example we have here, we can see that the months to break even is 60 months. And then again, this is another assumption in EBX, but you just determine how many months you're wanting to wait on any given day. In this case, in this example, it was set to 36. So we don't want to wait 60 months, so we're going to not retain this loan. A lot of our clients like to use the months to break even, as well as even just the cash to break even columns to kind of just gauge, on a daily basis. This really just depends on a client specific level. One day, maybe you're only willing to wait 36 months to get your cash back. Maybe your strategy changes and you have a little extra cash and you want to retain more, so you bump that up to 48 months. So that is just one of the ways to use the EBX model. But that is kind of the basic overview of the output that's coming out of the EBX model and where these values are coming from. But if there are any questions on EBX or what we've gone over, please put it in the chat or reach out to us after the webinar.
Excellent job, Natalie. Thank you for walking through all of that. We do have, let's see, a couple of questions. One question that came through, I'm going to put over to you, Paul. The question is, how is this approach with the API different versus the way EBX worked previously, where it was a standalone system?
Yeah, great question. Prior to the APIs between MCT Live and MSR Live, the best X was exported out of MCT Live and ran through an Excel model that was had to be run locally or with one of our traders. So while it was done and pretty efficient for the most part, did have some communication that took place between an MCT staff member and the client. And so now we can do this embedded in MCT Live and actually include a little more detail with it and run multiple a day, right? Like there's not a limit where the Excel model, like you would be limited just on time it takes to communicate files back and forth. So the API is really just like with anything you see in APIs, cutting out a middleman, if you will, as far as processing time and embedding it into one platform rather than multiple.
Yeah, perfect. Great. Thanks for that detailed description. And as a reminder, Natalie mentioned that we're happy to meet with you one-on-one if you're interested in exploring EBX further. David Burris is the primary contact for us on the MSR side. You can see his contact information on the screen right now. It's got his cell phone number and his email address there. We would welcome anyone that's interested in learning more about it, provide a one-on-one demo if that would be of interest. And again, thank you all for joining us this morning and this afternoon. We're excited about this, and we know that traders are going to love having having this detailed information at their fingertips, with just one click. So we're excited about it and looking forward to working with you all on it. So thank you for joining us and have a great rest of the day.
Thank you.
All right.